welcome. You're watching Business Today TV. I'm Sakshi Batra, and this special edition will be focusing on the earnings of Anand Rathi Wealth, which has reported a 23% year-on-year rise in the consolidated net profit for the quarter ended March to 42.6 crore rupees, and that's on the back of a 27% growth in the revenues that have come in at 143 crore rupees. Now, for the entire financial year 2023, the wealth management firm has also reported a consolidated net profit of 169 crore rupees. That's again up 33% from the year ago period, and the total revenue has also risen by 31% to over 558 crore rupees as well. Now, the board has also declared a final dividend of 7 rupees per equity share, and the total dividend for FY23 has stood at 12 rupees per share. Now, the company's assets under management have also grown by strong 18% on a year-on-year basis to close to 39,000 crore rupees as well. After this, we've also seen the Anand Rathi Wealth shares also gaining sharply in trade today. On an intraday basis, they were up about 6% on the revenue, beating the street estimates as well. And they've also hit the record levels too. So now to discuss more about the earnings and the outlook going forward, I'm now joined by the top management of the company. Mr. Rakesh Rawal joins in, CEO Anand Rathi Wealth Limited, and also Mr. Feroz Aziz joins us. He's the Deputy CEO of Anand Rathi Wealth. Welcome to both of you, and thank you so much for taking the time out for this discussion, and strong numbers out there, so congratulations to both of you. Mr. Rawal, if I could begin this discussion with you and understand from you, what have been the key growth drivers that have driven the profits and the revenues by this percentage in this quarter?
I think the key growth drivers in our business, like any other wealth management business, is the AUMs have increased by about 18% in a year where the market was completely flat. Yeah. So the Nifty was down 0.6%. That was very, very heartening. And then the whole strategic approach to our customers, wherein we focus on their goals and create a strategy to meet those goals, that meant that the allocation to various products was predefined, and therefore we just went through the path and the opportunities came, and that then led to the increase in revenue and profits for us.
Right. Feroz, if you could just talk a little bit more on the client addition front as well. There have been heartening numbers on this as well. And there's been a steady growth. Is it also increasing on a quarter-on-quarter basis? And what is the expectation going forward from here too?
Sakshi, like you rightly said, client addition is a very important variable. Our client addition has been very robust. In fact, almost about 70-80% more than the last year same period. We've added about 1,070 families in the second half of the year, and about 1,230 in the first half of the year in terms of gross additions. So this is a healthy addition. In bad times, if we get new clients, it implies that the existing clients feel safe with us. So they want their friends to also join us, and they give us more references. So that's been good. Sakshi, like you said, new client addition is also, there's one more good news there. The quality of new client addition. In the first half of the year, the new clients, 1,200 of them who came with a crore of a beginning amount. The second half of the year, the 1,100 who came with a crore and a half. Okay. So the quality of acquisition is also improved by about 50% in terms of the beginning check. So we believe that if we continue good work for our existing clients, which is 8,400 families, they already themselves know another 20,000 HNIs. So I personally think it's going to be robust for years to come. And we look at gross additions of 2,400 clients for the next year, which is this financial year, I mean.
Okay, and would it be more geographically spread as well, into the tier 2 and tier 3 cities as well as we go forward?
So you want to take that?
I wanted to understand about the geographical expansion of the client additions going forward as well. Are you finally moving beyond the metros that has been the plan of the company and garnering more interest from tier 2 and tier 3 cities as well?
Well, definitely we are looking at smaller towns as well. However, can I say that, hey, there are going to be more in the smaller towns and less in the larger towns? I'm not sure of that. But I think that there's large potential of client additions, both in the larger towns as well as in the smaller towns. Yeah. So I think the idea is that you have, very substantial client additions from all segments of the geography.
So,
Okay.
Sakshi, if I add a point here, I'd
Sure.
like to add a point here. See, our geographical expansion is going to be dependent on our current RMs. Quite a few of our current relationship managers or leaders come from smaller towns. We have been proposing to several of those to move back to their hometowns where their parents live and set up businesses there. That's a
Okay.
more very effective way of creating a geographical spread and an expansion which is astronomical. So 27 of our senior people belong to smaller towns, unique smaller towns. So I think that's what we look at in not this year alone, but in the next few years, we will expand our geographies by having our leaders move back to their hometowns. Because
Okay.
if a person like I come from Mysore, my parents live in Mysore. If I was
Yeah.
just a relationship manager, I would like to move back to Mysore, take
Yeah.
care of my aging parents, and I'll be able to build a business. And every town in India, especially the top 150 cities in India, have at least 100, 200 HNIs to serve serviced by
Sure.
about five unique relationship managers.
Sure, sure. Understand that as well. Mr. Raval, again on the AUM part that you were mentioning, that it's heartening to see an 18% growth in a year which has been largely muted for the market's performance. But on the growth guidance going forward, is it sustainable, this growth rate from here? Do you see it improving as well going forward? Especially why I'm talking about this is because even for as an outlook for FY24, as far as the markets are concerned, it's largely marked by a lot of macroeconomic uncertainties. And most of the brokerage houses, they have come out with reports saying that perhaps this year could be largely a muted or a low growth or a no growth year again. So would it be sustainable at this level? Would it improve from here?
See, the last year was flat, yeah, and I don't see any report which says it's going to be flat next year or lower next year. It may not be euphoric, right? So even if you have a 5 to 10% growth in the market, that'll up the ante of the 18%, and therefore my own feeling is that next year's AUM growth should be far better than this year.
Okay.
And also, I think Feroz is doing a lot of work in terms of uh, ensuring that our net mobilizations also increase significantly next year. So, given a combination, I'm very, very positive and optimistic for next year's AUM.
And I believe last time, I believe I spoke with you, there was a 40,000 crore rupees guidance for the AUM. Are you going to be topping up that as well?
No, I think for next year we have a guidance of 47,000 or so.
Okay, okay. So it's a sharp increase from the previous one. Okay.
Yeah. So therefore, I believe uh, we are in a good stage to get there and more.
Okay. Firoz, I'd like to understand a little bit more on the MLD business as well, as far as the total primary and the secondary issuances are concerned. And also, if you could help all our viewers understand what is the revenue and the profit split for that.
Sakshi, the MLD business is a very recurring business. MLD business has a lot of maturities. Let's assume an ex-client invested for 3 years. After 3 years, that comes for maturity. And then that person, if he doesn't want the money, doesn't use the money, most of our clients don't consume the money because it's intergenerational money. 80-90% of that gets rolled over. Right? Some clients actually want to exit sooner, is why they sell it to somebody. That's a secondary business. So now coming to the revenue split, our target in terms of a revenue split is 50-50. Given the muted equity mutual fund market, our ratios are still 38-40% favoring trail incomes, 60% upfront incomes, out of which large portion of the upfront income comes from the MLD, or now it has to be renamed to structure products business. So 50, 40, and 10 is the approximate revenue split. And I think hopefully next year, we are looking at 42-43% coming from trail and about
Okay.
45-50% from MLDs, and other small income streams are there, which are 7-8%.
Okay, noted that. Also wanted to understand from you, how is the customer behavior really changing? I mean, when we talk about equities versus debt, we have been seeing over the last few months when we've been in the rising interest rate scenario, were there more inquiries for debt investments, and how has that really changed after the finance bill announcements? And also, have you seen any kind of redemptions taking place?
Sakshi, to my mind, in a business like an HNI business, 8,500 clients is what you have. I'm just rounding it off to 8,500. You're going to be interacting with them at least 50 times a year. So what happens is you basically dictate the trend in the subset which you operate in. Now, let me give you an example. Last quarter has not been great for Nifty, right? It went from 18,100 to down to 16,800 and closed at 17,300. I'm very proud and happy that our clients bought more equity in this quarter. We added 900 crores of new money in equity mutual funds. It's
Okay.
one thing to say academically to buy low, but I'm very happy that these 8,400 clients behave more rationally than emotionally. So we collected 300 crores of net mobilization for October, December, when the
Yeah.
markets were high. When the markets were low, we collected 900 crores. So coming back to your point of what's the trend we see, of course, given the higher interest rates, there was attractiveness towards debt. But after the dampening tax change on the
Yeah.
debt side, which we don't have too much asset in, I think equity will have more attraction, and there will be flight of capital from debt funds allocations to equity. The most important thing is if you're managing 8,400 HNIs, if they are doing well, there is no way our business will not do well because they're smart, right? If we do good justice to their monies and if they're making money risk efficiently, then our businesses and the revenues grow with time.
Right. Also, Firoz, I think earlier you have indicated that you're going to be starting a separate tax vertical to provide holistic advice on taxation for HNIs. How is that panning out? And what can we really expect as far as the contribution to the books is concerned of this vertical separately?
See, Sakshi, this is a peripheral business. I don't know whether we will look at it as a revenue stream, but
Okay.
it's very important to actually give collateral or peripheral services like estate planning, like will creation, trust creation, taxation. All these are important integral wealth management constituents. Would we want to charge for them independently to create a revenue stream? May not be, but that supports our business and catalyzes. The same 8,400 clients have 15,000 crores outside. If we do justice to them, if we give them free services, which are very, very critical for their well-being, the likelihood that you will be able to nibble into this 50,000 crores increases substantively.
Right. Mr. Raval, if you could help all our viewers understand as far as the outlook for FY24 is concerned, both in terms of profits and revenues.
Well, we've indicated an 18% odd increase in revenue and 22 odd percent increase in the profitability for next year, and which is broadly in line with the continued thought process that we have been bringing to the market, saying that in this business, 20 to 25% increase is is very, very likely in years to come, for many, many years to come.
Yeah, but I was actually reading your statement also in the release that you pointed out. You mentioned how the company has really outperformed your own expectations as well in the last 1 year of after listing as well, and then giving a 20-25%. Is it on the being too conservative with the guidance right here? And do you think that you'll be able to easily top it up?
Well, I think that all companies have their DNA, and our DNA is that we'd like to, since we are dealing with a lot of investors and investors' money, I would like to deal with it in a conservative fashion rather than an aggressive fashion, and
Okay.
therefore, I want them to know that okay, these are these numbers, and that we'll do our utmost to sort of to achieve them. And
Okay. All right. Firoz, how is the competitive landscape really looking currently in the industry, and how are you planning to increase your market share competing with the wealth management firms, say by the private companies and also those backed by the banks right here?
Yes, Sakshi, competition is intense, but the methods are very different. Anand Rathi Wealth's method of dealing with a client is very mathematical, very strategic. not a product sale. If you see, all our revenues of 500 odd crores has come without doing anything new. But every wealth management outfit looks to do something new every month, if not every quarter. So our methods are different. It's a very competitive landscape. Since we distinguish ourselves on mathematics and process and a strategic holistic approach, I don't see that very getting very intense anytime soon. When we look at market share, we look at equity mutual fund market share, which is about 1.15, 1.16 percent to grow to about 3 to 4% in the next 4 5 years. There are very clear strategies to achieve that. We've been able to, if you look at the last 1 year, the mutual fund industry has collected a negative 15,000 crores other than SIP money. We have collected 2,500 crores positive. Okay, when the industry on the HNI side has lost money, I'm keeping SIPs aside, we have got 2,500. So if we keep collecting more and more money than the rest of the people, then our market share can go to 3 4% in the next 5 years.
All right, just in the end, just to get an understanding from you, how are you looking at the market landscape personally, and what are you advising investors to do at this point in time? For those investors sitting on an idle cash scenario, what are you suggesting to them?
Rakesh sir?
Well, we suggest very simply that, hey, if you have an objective of 12 to 14%, go strategically and invest. And don't be guided by what might happen for a shorter period of time. On a longer period of time, there's every indication that the economy should do well, and there's every indication that the equity markets should do well. And there's very, very good monies to be made in the next 3 to 5 years and even beyond.
Okay. Well, thank you so much, Mr. Raval, and thank you so much, Mr. Aziz, for being with us on this show and discussing all these insights about the earnings. Congratulations again on these strong set of numbers, and all the very best for the coming quarters as well. And we shall continue to hope to get more insights from you about the business outlook going forward.
Thank you. Thank you very much, Sakshi. Thank you for having us.
Thank you so much. And with that, we wrap up this special edition on the earnings outlook. But we'll continue to focus on markets going forward from here as well. So do stay tuned on to Business Today TV to catch all those updates as well. Many thanks for tuning in.
Hello and welcome to Business Today Television. Right from Paris, France, we are at the India-France Business Summit, and joining me is Nicholas from for speaking with us. First things first, bonjour. First things first, how do you see this opportunity of India-France collaboration in terms of your business in India?
Well, I think it's great just to meet lots of business leaders, and also like unique access you have to the government. I was very surprised how easy it was to describe our